What up my good people? You are welcome back once again to this channel. Like I promise you, I am going to load you with amazing stuff. If this is your first time, kindly hit the subscribe button. Let's move on. Okay, so let's do this today. So trendline lines by Dr. Candles. Sorry. So trend lines by Dr. Candles. I hope that is okay. Good. So we are going to be treating trend lines today. So like we explained earlier, the last time we did support and resistance. If this is your first time watching this video, you can go back to my previous videos, or you click the link under this video. I'm going to give you the link to the video on support and resistance. This is going to be on what? Trend lines. Trend lines are also dynamic support and resistance. However, unlike the normal support and resistance, we use the horizontal line to draw it, the horizontal line to draw the points together, or to join points together. With trend lines, we use a diagonal line. We use a diagonal line to join two or more points together. So whenever markets create a level that can be joined by a trend line, you can actually trade with that trend line using some few confirmations, which I am going to unravel today. Okay, so let's move on. So I hope by now everybody here knows how to draw trend lines. If you don't know, I think you can take advantage of this. If this is your first time, kindly take note of everything. I'm going to simplify the whole concept of trend line, the strategies behind trend lines. Make sure you watch this video to the end, because I am going to blow your mind. So let's kick off. So trend lines, like I said, they are dynamic support and resistance. They also serve as strong pillars of the market. They bounce trending markets. They can bounce an uptrend market to down, or a downtrend market to up, depending on the movement of the market. But unlike support and resistance, with trend lines, we draw them using the diagonal lines. So just like I explained on support and resistance, if you want to join trend lines, you should have at least two or more points that can be arranged diagonally. Okay, that can be joined diagonally. So looking at this market, assuming this is a market that is trending up, we usually use a trend line to join these points. So as you can see, I have joined here and then here together. So once you are able to join at least 2 points together, we say you have a trend line. So as market is going up, you now extend the line for a trading opportunity, because with the rules of trend lines, remember I said they serve as a strong pillar. They also bounce market, or they also bounce market to its opposite direction. So if market is able to bounce these two, and then you are able to join them with trend lines, then you should be anticipating the next time market will get there, it will surely bounce back again. So that is how it happens. So you can actually extend your lines so the day market will break through the trend line. So let's see that of the downside. You see, as you can see here too, you can just join them together with your trend line. So this is just how to join market. So this is an uptrend market. Usually with trend lines, we trade trend lines using a trending market. You don't go and trade trend lines on a ranging market. If you still don't know how to identify an uptrend or a downtrend market or a ranging market, kindly go back to my previous videos, or I'll drop a link on that. I have already made a video explaining how to identify an uptrend market, a downtrend market, and then what, a ranging market. So let's continue. So this is an uptrend market. For you to join the market with a trend line, it has to what, create a levels that can be joined with a trend line diagonally, so we can have a trade what, opportunities. So with this, assuming you join here and here together, the day market will come back to bounce around that area, then you can be looking out for what, a buy opportunity. For now, let's just learn how to draw them, and I will teach you how to take advantage of them. So this is that of downtrend. So you can see, so all you need is to join at least 2 or more what, points together diagonally. Good. So 2 or more points together diagonally. That is trend line for you. So someone may ask, assuming if I want to use the candlestick to draw the trend line, should I use the body or the wick of the candlesticks? There are some school of thought that said you should use the body, others said you should use the wick. I prefer the wick. However, there are circumstances I use the body if I realize that there are a whole lot of bodies that are in line rather than the wicks. So depending on the ones that are in line, you utilize it. So for instance, I want to draw a trend line on this market. I will just use this. So that is, so you see I have joined this line and then this line together to get my trend line. So that is how to draw a trend line. That is how to draw a trend line. So quick one. So now, just like support and resistance, we have 3 methods of what, using them. Like we have 3 strategies behind them. The same thing applies to what, trend lines. We have the bounce method, and then we have what, the breakout method. So I'm going to take them one after the other. So starting from the bounce method, usually before you consider trading with a trend line, there must be 3 confirmations you need to watch out. The first thing is the trend. The trend should always be your friend. Like I always say, trend should always be your friend. Make sure that you check the trend. If the trend is an uptrend, make sure that any trend line that you are drawing, like for instance with this trend, as you can see, it is creating a level of higher high and then higher low. So this market is obviously an uptrend market. So when you draw a trend line that is in the opposite direction, for instance, this trend line, meaning that you can be having an opportunities here to sell the market, but because the market is an uptrend, you ignore any sell opportunities being created by a trend line. Else market will just kick your ass off, and then you'll be like, this trend line strategy is not working. However, if you always trade in line with the trend, you realize that your winning or success rate will be higher than somebody who doesn't follow the trend. So with this market, this is an obvious uptrend. So whenever I want to take trade, I'll only take trade around here, around here, around here. So I will always look for a buy opportunity. One market hits or bounce off the trend line, bounce off this trend, bounce off this trend. Anytime I see market bouncing off the upmost trend line, I ignore it, because it is what, an uptrend. The same thing, this is what, a downtrend. Even though when market hits here, it bounce back, but I ignore it because I want to follow the principle of trend line. We always follow the trend. The trend is always our friend. Since the overall market is what, a downtrend market, what I usually do is that after drawing my trend line, any market that creates a sell opportunity for me, since it is in line with a downtrend, then I can take a trade around those levels. So I take trade around here, I can take another trade around here I can also what take another trade. But around this area there are a whole lot of buy opportunities created by trend lines. You ignore it because what, it is not in line with the trend. So that is the first thing you need to take note of. The second thing is, before you take a trade based on the trend line, you should have some confirmation whenever market hit the trend line. You don't just go and jump into the market just by seeing market has bounced off a trend line. There must be confirmation. Maybe it can be as a result of maybe a demand zone, a supply zone, maybe a candlestick, a reversal candlestick that form around those areas. So those are the few confirmation, and other things I will be teaching you guys soon. So we have the bounce method, and then we have the breakout method. That is the two strategies we use in trading using the trend line. I hope you understand. So with the bounce method, like we did on support and resistance, whenever market bounce off a trend line, you sell. When it bounce off a trend line below here, you buy. Here you sell, here you buy, here you sell, here you buy. However, we always consider the trend. So if it is an uptrend, you only consider buying. But if it is a downtrend, you consider what, selling whenever it bounces off a trend line. Then the other one is the breakout method. With the breakout method, like I said, even though this trend line acts as a level of support or resistance, so it usually turns a trend market to its opposite direction, there is a day market will actually break through the trend line. So whenever market break through the trend line, you don't ignore the trade. We take advantage of what, the breakout. Usually about 90% of the time market comes back for a retest after what, a breakout. So immediately after a breakout, market comes back for a retest. Then you can now take your sniper trade around here, then follow the breakout market. I hope you understand. So over here, trend line, market what, break through this trend line around here, then came back for a retest around here, then you follow it and then sell, take a sniper trade here. Let's see for a buy structure. So if you were using the bounce method, this is where you can sell, because this market is what, a downtrend market. So whenever market bounce off what, the upper trend line, you sell. Bounce off here, you ignore the buy. It bounce here, you sell. So now you were around here waiting for market to bounce here for you to sell. Unfortunately, market what, break through this level. So instead of you to ignore this trade, you wait for what, a retest, then you take advantage of the breakout. I hope you understand. So over here you see market will now comes back to the trend line, hit it, then now it will become what, a new support area where it will push market to the upside. So over here you can take your sniper trade here, then boom, to the upside. I hope you understand. So the previous market here was a downtrend. Just by looking at this time frame, I don't want us to go back to the time frames. I'll make a simple video on how to analyze the markets on a multiple time frame. So this was in downtrend, right? And so market break through this trend line or this structure, now creating a new level of high and then higher low, higher low, higher and higher low. So over here, as you can see, you can draw your trend line by joining points together. So you can join this and that together. So as you can see around here, I use the tip here because I was able to join this and that together. You see, then around here, I don't care whether one has been able to portray. So this can be, if this was a downtrend market, I wanted to take advantage, I could have just used the pin bar. This will be just be my reversal candlestick to take the trade. However, because market has breakthrough structure, any trade I see at the upside, or any trade that is giving me a sell opportunity, I ignore. I only take trade opportunities based on an uptrend. I hope you understand. So this is the uptrend structure. This is the uptrend structure. So this is what I want to see. So let me extend this trend line a bit. Okay, so anytime market is able, so I don't care how many times market will test this. Until market break through this structure, I will never take any buy trade, because I still feel that this downtrend has been broken. So we are going to the upside, so creating a whole lot of higher highs and then higher lows. So what I'll be looking around here is to buy around this trend line. So I have joined this point and then this point, even 1, 2, 3 together. So now we have what? A level of what? Trend lines, or a level of support around there. Because remember I said trend lines are also what? Dynamic support and resistance. So let me play the video and let's see what will happen. So all you need here is patience, because the trend line is your indication. You got to wait. You have to wait until market hits what? The trend line. You don't take any trade. So market is coming closer. Let me extend it. I think market is there. So this is a perfect one. So you see, trend line. Now all you need, because the market is an uptrend, you can confidently take this trade opportunity. Your entry here, you can target to the nearest supply zone around here. Your risk should just be like 10 pips to 20 pips below the zone, and this is like 1:12 risk to reward ratio. That is very powerful. I hope you can see exactly on that trend line you take your trade. So let's play the market very fast. Market is already in profit. Allow your take profit to hit. You have a target. Because it is an uptrend, there is a high possibility it might even go beyond where your take profit is. So just leave it. You see, our take profit hit. So this is how you can simply take a trade with the trend line. So I took trade because I analyzed the market. I realized that this market is now what? Resuming a new uptrend. So I want to join it quickly. So I joined 1-2 points together, extended my line, even though market did a whole lot of stuffs around here. But because I was waiting for market to hit this zone for me to what? To buy, I didn't what? Bother any trade there. I hope you understand me. So this is just basically using the trend lines. However, the bank traders in my community will have better entries than you, because aside the trend line, they will be looking at a supply zone around here. I hope you understand. They will be looking at a supply zone around here. So supply zone coupled with what? Trend line now becomes your what? Better entry. And then I hope that is clear. So that is it. So let me see if I can get you another. So this is an example of a bounce method. So like I said, we have two strategies. The first one is the bounce method, and the second one is the what? Breakout method. With the bounce method, all you are waiting is for market to bounce off the trend line for you to buy or sell. Let me see if I can get you other examples. So this is another uptrend market. As you can see, markets created a whole lot of what? Resistance, support here, that can be joined with a diagonal line. I hope you understand. So diagonal line has been able to join this 1-2 points together, and then we also join an upper point 1-2-3 points together. So this is a trend line, this is a trend line. But as you can see, this market is what? An uptrend market. So what do? We ignore any what? Sell opportunity. We only what? Take buy trades. I hope you understand me. So anytime market gets back to this trend line, you what? You take the trade and then what? Make money. You see what happens here? Market came back exactly on that trend line. You took your buy opportunity, and then that is how you make money. So this is pounds JPY on the 4-hour time frame. Took a buy trade after this trend line came back to bounce off an already drawn trend line. You took a trade and then make money. So this is the bounce method. Let me see if I can get you another example. So this is, I think this is the same example. Okay, so this is okay. So this is, I think this is another example. This was a trend line. This was a market that created a diagonal points that has been bouncing markets to the upside. The whole market is an uptrend market. You see, trend line tested, trend line tested, trend line tested. So I drew my trend line waiting for market to hit that zone for me to buy. I hope you understand me. So anytime market gets to that zone, I calculate my risk to reward ratio, enter into the market. You see what happens? Immediately market hit that area, boom. So coupled with other confirmations here, which I'm going to expose you to them very soon. Once you are on this channel, I will definitely expose you to those confirmations. So around here, boom, markets went up. So that is the bounce method for you. This is another example to the downside. So this market is what? A downtrend market, right? So any buy trade I ignore because there's a trend line. That doesn't mean that anytime market hits a trend line to the downside, I should be buying. No, because the market is what? A downtrend market. You see, coming down, up, down, up. See, it is creating a whole lot of lower low, lower high, lower low. I hope you understand. So this market what? Is a downtrend market. So I joined these 2 points together, 1, 2 together. Let me see if I have. Okay, so I've joined these two points together, 1, 2, and then the third time market came back to hit that trend line. You see how massive the drop was. You see, this is a sniper entry. This is where you pick a sniper entry around this area, zero drawdown, boom, market your side. So this is how you take what? A sell trade on a what? A trend line that is picking a down movement. So this is another one. As you can see, bounce method created trend line, trend line, trend line. So maybe I joined these 2 points together, 1, 2, and then finally market hit the trend line again. So over here I buy, stop loss below, take profit to the nearest what? Support or resistance level. So that is the bounce method. The next one is the breakout method. Remember, with the support and resistance, I said it is not always that support and resistance are going to hold forever. The same applies to trend lines. One day, one way or the other, market is going to break through the trend line. That doesn't mean that when market break through a trend line, you should ignore the market. That is where you make even a lot of money. So over here you take what? Advantage of the breakout. We call something the breakout and the retest method. All you need is to wait for market to break through a trend line, comes back for a retest, you take a sniper entry, then boom. That is how we pick. So over here, as you can see, this was a trend line 1 2, and then market now break through the trend line, came back for a retest, then boom. So there are times market after breaking through the trend line might not come back here for a retest. So in that case, you ignore it. When it comes back for a retest, you said like meaning that your edge has been met. I always say always have an edge into the market. You don't just go and trade because you've seen candlesticks moving up and down. I hope you understand. So obviously you should see something that is giving you an indication that I need to buy. So with my breakout strategy, what I always do is that I wait for a pullback. If there's no pullback, I don't enter into the market. Sometimes market can break through a trend line. The pullback doesn't just happen like the way it did right here. Maybe it can happen with just a single candlestick. Candlestick will go back, test the trend line, and then start dropping. So it is still what? Pullback what? And retest. Let's see another example. So this was a downtrend market, as you can see. So over here, trend line. So all here you can even take your sell position here. But if you want to consider around here, if you want to consider this trend line 1 2 and then 3, waiting for market to break through. So as you can see, market break through this trend line, a single candlestick came there for a retest. Over here you now what? Take your sniper entry, and then boom, you make money. So that is the breakout method. So usually I wait for a retest before I take a trade. So this is an example of a market that break through a trend line without retest. So with this kind of market, you can actually ignore it because there is no what? Retest for you to pick a sniper entry. So that is it. So this is another one. You see, I have joined these points together, 1 2 3 4 points together. I was around here waiting for market to bounce off for me to sell again. Unfortunately, market break through the structure, came back for a retest. I now what? Take a sniper trade because there's what? A breakout of what? A major trend line that came for a retest. I take a sniper trade here, boom. So that is it for the market. So breakout and the retest strategy. So in a nutshell, said there are 2 principles that you need to consider when trading the trend line. The first one is the trend of the market. If it is an uptrend, your trend line, if you are taking any trend line trades, make sure you are taking it to the upside. If it is a downtrend, make sure that any trade you are taking, it should be to what? To the downside. I hope you understand. So that is it for trend line. And then you always wait for a confirmation candlesticks, maybe a major zone, for you to take your sniper entry. And I said we have 2 strategies that we use in trading this trend line. The first one is the bounce method. Whenever market bounce off a trend line, once it is in line with the trend, you can take a sniper entry, or you take advantage of what? The breakout and the what? Retest. Whenever market what? Break through a trend line, you know that most of the time, about 90% of the time, market comes back for a retest. Let me chip into my favorite pair, Euro USD, and see if I can identify some few trend line trades I took. So as you can see, so these are major trend lines. You see, I've joined this 1 2 3 points together. The next time market came here, coupled with other confirmation, like I told you, this was what? A demand zone that was created by big banks. So hits a major what? Trend line, coupled with my Fibonacci. I took this trade, and then I made money. So that is it. So another trade is around here. Now all I'll be waiting for market to give me a very nice confirmation candlestick around this area, then I can buy this pair. However, if market break through this trend line, I will be waiting for a retest for this market before what we now go to the what, to the downside. So that is it for trend line. Let me see if I can get you another one. So as you can see, this was another trade. I took a sniper entry because of this breakout and retest of the trend line. Market gave you a very nice trend line, 1 2 3 4, came back to retest that trend line at a very major key area, then drop. I hope you understand. So that is it for trend line. So I can give you a whole lot of examples, so I don't want to waste much of your time. Okay, if this video added some impact into your forex life, kindly smash the like button, subscribe, and then share for others to take advantage. Yeah, thank you very much.